A very good morning and a fantastic Friday to you. Welcome to today's episode of Morning Wealth. We'll talk about three things: unemployment numbers, earnings update, and the new bond ordering system. US stocks reversed early losses and edged slightly higher Thursday, powered by big technology stocks that had driven much of this year's market rally. All three indexes opened lower, wobbled between gains and losses for much of the session. Momentum appeared to shift on reports that discussions over potential new COVID-19 bill would resume in Washington. Senate Majority Leader Mitch McConnell has agreed to restart negotiations with Democrats over a new bill, is what Senate Minority Leader Chuck Schumer said in an afternoon press conference. The Dow Jones gained about 0.2%, the S&P was up 0.4%, while the tech-heavy Nasdaq was up 0.9%. On the yields, the 10-year yields fell by about 2 basis points to 0.85. The dollar reversed course and fell against most G10 peers, though Aussie retreated. Oil climbed while gold dipped, and Asian equity futures are modestly in the green. Interesting sector performance yesterday. The energy and technology sectors led the gains in the S&P 500. Halliburton gained more than 3%, while Microsoft, Apple, and Amazon also moved up higher. In other markets, the stocks 600 fell 0.8%. Major Asian equity benchmarks ended the day on a mixed note. Japan's Nikkei 225 ticked down 0.4%, while China's Shanghai Composite rose 0.5%. Unemployment numbers came out yesterday. The number of Americans filing for unemployment benefits rose to 742,000 in the week ended November 14, from the previous week revised level of 711,000 and well above the market expectations of about 707,000. It was the first rise in initial claims in over a month amid rising COVID-19 cases and new lockdowns across the country. On a non-seasonally adjusted basis, the number of claims were up to 743,000 compared with 725,000 in the previous week. Also, more than 320,000 people applied for help from the Pandemic Unemployment Assistance Scheme, which covers workers that do not qualify for initial claims, compared with the 296,000 in the previous period. Meanwhile, sales of previously owned homes rose to a 14-year high in October, and median home prices again hit new highs. The housing market has really been an economic bright spot in the recent months, propelled by rock-bottom mortgage rates, greater opportunities to telework, and a quest for more space to ride out the pandemic. On the earnings front, L Brands jumped about 18% after the company said strong sales at its Bath & Body Works chain had helped counter declining sales for its Victoria's Secret brand. The company's quarterly revenue climbed 14%. Macy's reported as well. Macy's rose 2.1% after the department store chain reported that its profit margins improved as lower inventory allowed the company to sell more items at full price. Quarterly sales, however, dropped 23%. Macy's posted slowing digital revenue growth as well, raising investors' concerns ahead of the crucial holiday season. The retailer gave limited full-year guidance but beat on comparable sales for owned and licensed stores. While the online performance was reasonable, it doesn't make up for the severe sales decline in stores, is what an analyst noted. A new bond ordering system, Direct Books, made its debut. The first step in a process its backers predict will transform the way trillions of dollars of company debt is marketed and sold to investors. Founded by Goldman, JP Morgan, Citi, Bank of America, Morgan Stanley, and other big players, the platform will initially provide deal announcement and updates for dollar high-grade bond sales. The ability of investors to place orders and dealers to make allocations will come later. Fixed income has traditionally been and is a OTC market. I think systems like this will make it more towards or drive it more towards an exchange kind of way of operation. That's the update. Stay safe and healthy. Have a lovely and a restful weekend ahead, and I'll speak to you on Monday.